Hello XRP community. Today we are putting a bold claim under the microscope. XRP is the next Amazon and could even surpass Amazon and Tesla over the long run. We will separate marketing from mechanics, map the Amazon and Tesla analogies to hard payment rails, and outline what must happen, step by step, for XRP to earn a 3-digit valuation on utility, not hype. Let's start with the Amazon analogy. In the late 1990s, Amazon solved one thing exceptionally well: books. That wedge unlocked logistics, payments, and a marketplace engine that later scaled to everything. The thesis for XRP is similar in structure, not in sector. Solve one massive problem first, cross-border payments, and do it with speed, finality, and cost efficiency. Cross-border flows are measured in trillions annually. If you can make those movements cheaper, faster, and programmable, while meeting compliance needs, then expansion into adjacent use cases becomes a matter of integration, not reinvention. What does solve payments actually mean in practice? It means plugging into the language banks already speak. ISO 20022 is that language. Richer, structured messages that reduce reconciliation errors and make different networks interoperable. As messaging becomes standardized, the bottleneck shifts to liquidity. Someone still has to move value across currencies and jurisdictions in real time. That is the lane XRP was built to occupy, a neutral, high-throughput asset designed to bridge value between ledgers with predictable performance. Now with the Tesla parallel. Before Tesla's famous runs, the stock endured long, grinding consolidations under regulatory and execution clouds. Then, when credibility, scale, and market structure aligned, repricing was violent and fast. XRP's chart has seen similar patterns: long bases, bursts of momentum, and extended pauses when regulation dominates headlines. The lesson isn't that history will copy itself. It's that long consolidations often precede nonlinear moves when real adoption breaks through. If XRP follows the Tesla rhythm, the next decisive repricing would arrive only after utility metrics, corridors, volumes, and institutional integrations cross a threshold the market can't ignore. If you want a concise playbook PDF, levels and validations, utility KPIs to track, and the exact confirmations that separate a squeeze from a sustainable trend, type playbook in the comments and we'll prioritize it for the next update. Let's address the $100 question. One analyst, among others, has floated $100 as an initial fair value target in a true utility regime. Think of it less as a guarantee and more as a scenario analysis. If XRP intermediates a meaningful slice of cross-border flows, FX, and tokenized settlement under ISO 20022, then price discovery will follow usage. The path from here to 3 digits is paved with boring but powerful milestones. More corridors, deeper liquidity, bank-grade custody, stable value rails that actually settle around the clock, and tokenization programs that move from pilot to production. Price will chase throughput and reliability, not the other way around. How do banks touch XRP in a multi-rail world? Through the systems they already use. Payment hubs, core banking providers, and integration partners that connect to both Swift rails and Ripple-powered solutions allow institutions to route flows where economics and compliance are strongest. That means a bank can maintain its existing messaging stack and still access XRP-enabled settlement when it makes operational sense. In practice, this looks like coexistence. Messaging networks orchestrate, settlement networks compete on speed, cost, and liquidity depth. What about the claim that XRP can surpass Amazon and Tesla? Framed correctly, the comparison isn't about business models. It's about addressable market and compounding utility. Amazon scaled by expanding the surface area of commerce it touched. XRP's opportunity would scale by expanding the surface area of value it settles. Remittances, B2B, treasury, FX, tokenized deposits, funds, and collateral. If the rails behind those flows converge on ISO 20022 messaging and 24/7 settlement, the instruments that provide liquidity across corridors gain share. That's the thesis. It is ambitious. It is also testable. Here are the tests that matter over the next quarters. 1. Structure on the chart. Higher lows on the daily and weekly time frames with expanding spot volume at resistance. 2. Derivatives posture. Rising open interest without overheated funding, which signals healthy risk-taking rather than one-sided leverage. 3. Exchange balances. Net outflows after red days, implying accumulation. Net inflows into strength, implying supply overhang. 4. Utility KPIs. Corridor announcements, throughput metrics, and institutional deployments that convert pilots into real volumes. When these signals align, the probability of enduring repricing rises. Let's talk risk, because every big thesis has failure modes. Regulatory timelines can slip. Macro can tighten liquidity. Competing rails can win specific corridors on cost or jurisdictional fit. None of these invalidate XRP's design. They can delay or reroute adoption. A rational approach is to treat the thesis as conditional. If ISO 20022 continues to standardize messaging, if real-time rails become the norm, and if institutions prioritize neutral, efficient settlement, then XRP's role grows. If those conditions stall, the timeline stretches. Where does the market stand right now? Price is consolidating below major psychological levels. Breadth in altcoins is improving, and traditional risk assets remain resilient even as safe havens stay bid. That combination, risk-on with hedges, often precedes rotation into utility names once volatility compresses. For XRP, the near-term roadmap remains staged. Reclaim and hold key round numbers, convert resistance into support, and challenge prior supply bands with rising spot volume and stable funding. Only after those confirmations should the next magnet levels be treated as live. A note on strategy. Think like a treasurer, not a tourist. If payments truly become always on and data-rich, value moves more frequently in smaller increments. That punishes slow liquidity and rewards assets that settle quickly across rails. If you believe that is where the world is heading, then preparation beats prediction. Define your levels, size positions so normal volatility doesn't eject you, and let data, not memes, trigger decisions. To close, here is the bottom line. The Amazon analogy isn't about web stores, it's about sequence. Solve one giant pain point and earn the right to expand. The Tesla parallel isn't about cars, it's about how markets reprice once credibility and scale collide. For XRP, both analogies point to the same operational truth. If Ripple and XRP continue to make cross-border settlement faster, cheaper, and programmable under ISO 20022, and if institutions route real volume across those rails, price will follow utility. The claim that XRP could surpass the giants is a destination. The map is adoption. Tell us whether you see XRP's path as more Amazon curve or Tesla rhythm, and list the top 3 confirmations you want us to track daily: levels, funding/open interest, and exchange flows. If you want the printable playbook, comment playbook, and we'll publish it in the next update.